Hello friends. Of late, there has been a lot of discussion on the topic of tax havens. So let us try to understand what are these and what are the implication of tax havens. Basically, a tax haven is a country where there is either zero tax or very low rate of taxes. Again, the legal system here is fairly opaque. In fact, the disclosure norms are very lax. That means the companies who start their business need not disclose much to the regulatory authorities in those countries. And generally, they don't have uh, any protocol for sharing of information, financial information with other countries. And of course, the ease of doing business is very prominent here. And that is the reason why a lot of companies come and get their companies registered in these countries. Now, what is the impact of a tax haven? Okay. Now, these countries would get the benefit of inflow of funds, capital. When the company starts a business in that country, the fund is flown to that country. But the other country where the company actually does its business loses its share of tax revenue. That is the reason why of late almost all the countries are against this tax haven and trying to bring in laws to prevent shifting of their revenue. Primarily, tax havens have been used as a tax avoidance tool. Now, some of the examples of tax havens are Andorra in Europe, the Bahamas in Caribbean, Belize in Central America, Cayman Islands, which is a British overseas territory in the Caribbean, and again Bermuda, which is also a British overseas territory but in the North Atlantic Ocean, and of course Mauritius in the Indian Ocean, because generally the funds flowing into India is flown through Mauritius. Now, what are the regulatory oversight about these tax havens? As I said earlier, generally nowadays the countries, most of the countries are wary of these tax havens. Okay. There is an organization called Organization for Economic Cooperation and Development. This is an international organization which has its objective inter alia as prevention of international tax evasion. Okay. Now this organization OECD is trying to bring in automatic exchange of financial information. In fact, due to this reason that in India, recently we have been receiving information from Swiss banks. Generally, Swiss banks are known to be very secretive, but recently they have shared quite a few information with the Indian authorities, which led to detection of a lot of tax evasion. As far as Indian tax laws are concerned, certain changes were brought in to prevent flight of capital from the country to tax havens. In the year 2016, uh, Income Tax Act was amended to introduce equalization levy. Now, this is nothing but taxation of digital transactions. Then, in the last year's Finance Act, a new provision was introduced wherein the law says now that non-residents who are not liable to pay any tax anywhere else would be deemed to be residents in India subject to certain conditions, and their income would be taxed in India, of course, if it exceeds rupees 15 lakh. Thank you, friends. This is about tax havens. Thank you again.